All right, I have a great episode for you today. I got Jackson by my side. I've been working hard on this episode all day long. Think you guys will like it. As you guys know, it is the end of the week, also the end of the month, and also the end of the quarter. I didn't even think about that until just now. So they say, what do they say about March? In like a lion, out like a lamb or something, or there's something like that. Okay. Well, let's look at the weekly results. So on the weekly results, and this is for all the single name, or no, this is for all the index names, actually. Well, and on the weekly results, it was the week of Maxi for sure. ULTY also had a heck of a good week, as did YMAX, as did JEPI, as did QQQY. A lot of these other ones performed well, but the ones I mentioned performed particularly well. All right, so here's the weekly change on the single names. So somehow Maxi got on both lists, but yes, Maxi did great. Probably deserves to be on both lists. I mean, anytime you're up 10% in a week, that's pretty good. And especially but the fact that you get all of the upside that your benchmark got. It's incredible. Lots of performers this week. Look, TSLP outperformed Tesla. TSLY did well. It did not outperform Tesla, but it did well. Goop outperformed Google. AMZP outperformed Amazon. Misty outperformed Mr. Sky outperformed. All of the rest of these did as expected. I don't see any that underperformed on the downside except for Clip. Everything else either did as expected or really well. MRNY did really well. AMDY, those both outperformed. It was the week of the outperformance. Sky outperformed. I think I already said that. Coney outperformed. OARC outperformed. AMZ outperformed. I put all the curve funds down here on the right-hand side, I believe. I'm trying to get this. I tried to work on the spreadsheet a little bit today. Any event, so that's for the week. So it's been a great week, been kind of a crazy week. Let's look at the, maybe we should look at TradingView really quick. All right, let's see what, let's see how the week ended up. This is a daily chart. That's BITO. Which is a good proxy for Bitcoin. I use BITO as a benchmark for Maxi. We hardly ever look at daily. I'm always looking at 30 minutes. So maybe at the end of the week, we should look at daily. Although with these profit boxes on here, it's probably not going to work really well. All right. Well, maybe I can't look at charts when I'm sitting outside because the Wi-Fi is so weak. I was so worried about getting bad Wi-Fi the other day with my interview with Jay. I went and sat right next to the router. Anyway, okay, well, this obviously isn't going to work, but I have other good stuff to show you guys. But anyway, on the daily, it doesn't, I mean, but look at this bull market we're in. I mean, we closed the daily outside the Bollinger Bands right here. First time it's been outside in a while, and that's usually a good bullish signal, especially if you get a couple of days follow through, and we did. Even when we got a pullback, it didn't go back any further than the breakout bar, so it held there and went up. So that's, I mean, that's bullish. We haven't got the opposite momentum signal. The opposite momentum signal would be a daily close on the other side of the Bollinger Band. This is the 1.6 standard deviation Bollinger Band. But anyway, okay, so there's NASDAQ. Let's look at Russell. This is what IWMY trades. Now this thing's incredible. This thing just gave a fresh momentum signal if you play momentum signals, but right here was a momentum signal, closed the daily bar outside, and you did get a follow through bar, but then it came back all the way the other way. But anyway, but we haven't ever since February 9th, we haven't had a close on the other side of the Bollinger Bands, which would indicate to me the trend's reversing. And it could also be a bear trap if it does that. But anyway, so far we're pretty green on that. Okay, well, you guys that waited around, I know this has been kind of boring, but my gosh, look at that. Look at that SPX. Also, look, I first started doing profit boxes back here. That's when I first met some of you guys. That was November 13th. That was before Thanksgiving. I remember that when I first started doing these videos. And anyway, but what I should have done, I should have just liquidated every asset I owned and put it all in a triple leverage, SPX fund. I mean, my gosh. And quit screwing around with this YouTube stuff. I mean, it went straight from 4,400 that day I started to where we sit at, I mean, 5,250 right now or something. So as far as momentum signals go, that was the first one. And when it's one you haven't got in a while, when it hasn't given a new signal in a while, it gave a false signal down here. It gave a sell momentum signal, and you did get 2 days of follow through, but then that turned out to be a bull trap. Anyway, then it ran to the other side. And but then ever since it closed outside on that day at 44.90, if you took that bullish, just a trend signal, I mean, it hasn't given the contrary signal yet on the daily. It will, I mean, but anyway, that has been one heck of a bull run. Okay, so you guys have waited around. I appreciate it. So we're going to have the top 5 ETFs of the month, and we're going to start with the single name category, the single name division. All right, so at number 5, we have Maxi. Okay, so yeah, Maxi's in the single name division because it's not an index. So let's look at all I guess let's look at old Maxi. I hadn't thought, well, these charts are so slow, we probably aren't going to look at too many charts. But what we are going to look at is we're going to look back at the buffer report and see why Maxi got put on here on the 30 day. So this is the past month, the month of March, and single name time frame. Maxi got on here, and it's up 10.7%. I mean, it's definitely worth being on here. We'll look at this chart in a second after we get through with the list. All right, number 2, MRNY. All right, well, let's check MRNY out. What did it do? It was only up 9.7%. That's really good. Its benchmark was up 12. All right. Number 3, Sky. Sky had a heck of a month. Look at Sky. Sky up 10%. I mean, if you're up 10% every month, that's 120% a year. You have no problems if you can compound at that rate. And I mean, and average that. Of course, you can't average that, or mere mortals can't average that. I can't average that. Maybe you can. But anyway, that's great. It's up 10%, especially when the benchmark's just up 6.73. All right, so number 2, Coney. What's Coney doing here? Coney's only up 27%, but heck, the benchmark's up 28%. It's giving up hardly any upside. These guys are doing an excellent job, and it's not them. They use the math of the options themselves, and they let the volatility of the market set where they sell the strikes. So with Coney, that's super volatile and misty, they're selling the strikes 3.5 miles away. And sure enough, the stock goes up. It goes up that far every week and further some weeks. Some weeks they blow out their strike. But anyway, on average, they've been catching just about all the upside. You can see on Misty, they've caught more than all the upside. So I bet Misty's number 1. Yeah, well, of course. Well, how could you not? I mean, Misty, look at that. Okay, it's up 60%. And I checked these numbers too. Some of these didn't look right. But I went back and I checked all the dividends. Anyway, if you guys see any errors, let me know. But I started to shoot this video about noon, and I worked on the spreadsheet till about 4, making sure all the I's were dotted and T's were crossed. And I have a new chart. I organized them. I put all the single name ones together and all the index ones together. Anyway, if you see something I missed or something, just leave me a message. But anyway, so that was great. So single name stocks, Misty, you got to give it to Misty. Okay, so now well, we have another division. Oh yeah. Now we have the top 5 ETFs of the month, the index division. All right. And I didn't have my slide making down too well here. Okay, but at number 5, YMAX and JEPI. So let's check into that. YMAX and JEPI. So here's the 30-day indexes. Okay. I know which one's not going to win. I'm looking at you, Tress. I'm just joking. Tress is going to grow up to be a freaking good fund someday soon. And it'll be doing well when the other funds are not doing well. But anyway. All right. So gosh darn it. What did I say? YMAX and JEPI. Okay, well, let's look at that. So YMAX. Okay, well, YMAX definitely deserves to be on here because it's up 2%, whereas its index, which is the NASDAQ, was actually down on the month, if you can believe that. I mean, that's part of the reason why QQQY hasn't had a good month and IWMY has had a good month. These high yield funds can only do as well as the underlying. They can earn an income in any market, but as far as the income plus the NAV element, so that which gets you the really high total returns, they need help from the parent because they need the parent to be up to appreciate so they can roll the strikes and appreciate with them. But in any event, it's been a bad month for the NASDAQ, and it's been a great month for Russell. But I didn't realize before I did this report, the NASDAQ was down on the month. But anyway, so YMAX, that's easy. They outperformed the parent, and they made 268 basis points. How can you go wrong with that? But look at JEPI. That's why I made it tight. JEPI outperformed its benchmark by about the same margin. They outperformed by about the same margin, but SPX was up a little more. But they're both alpha machines. They're generating all that alpha, 2 points of alpha, both of them. This one has 2.5 points of alpha. Anyway, all right. So, and of course, I like to see JEPI on there. JEPI's a highly underrated fund, misunderstood also. All right. JEPQ comes in at number 4. Well, JEPQ is a great fund. I've always said it was the gold standard of funds. And sure enough, it was up 2.51%, where, of course, the NASDAQ was down. We already discussed that. Actually, YMAX was up a little more. I should have put YMAX ahead of JEPQ on the list, but I gave JEPQ the nod. The list is also based on judgment, and I like the JEPQ has more stocks. The more stocks, the better. I mean, the more diversification, or what is it? Diversity's our friend, or diversity's our strength, or whatever they say. Anyway. All right, JEPQ. Number 3, this is one that I don't know a whole lot about. I use the Russell for the benchmark because I think they use some smaller stocks. I need to study up on this one. But it's a stable made of Bali, and I like Bali a lot. And I just thought when I'm saying that, I believe I don't have Bali on here, which anyway, and I worked like 4 hours trying to make sure I had everything. But in any event, I apologize for not getting Bali on here. I wonder how Bali would have done. But Bali and Poppy are both blacks. They're both the same. They have the same underwriters, same parent company, and it's BlackRock, I believe. Yeah. Anyway, I really haven't noticed Poppy too much, but anyway, it just killed its freaking benchmark. I mean, that's awesome because the Russell was up a bunch this month, and this outperformed the Russell, which was up a bunch. So that's damn impressive in my book. All right, number 2, QQQY, QQQY. And of course, I like to see this, but I mean, I'm not being biased. I mean, maybe if I would have put it 1, if I was being biased or something, but it's only up 5% when its parent is down. This is where you see the difference between JEPQ and QQQY. the market went nowhere. When the market goes nowhere or down, QQQY is going to outperform JEPQ by a pretty good little amount. QQQY has the most buffer that you can get because of the dailies. It's the most buffered of any of the ones out there. So the buffer plus the fact it's comprised of 100 stocks, you're an index based on 100 stocks, buffer plus diversity. That's why I'm like it so much, because I'm really conservative and I hate being not diverse enough. I've been changing my mind kind of lately about maybe I should like the single stock ones more. But in any event, that's why I like it so much. And you can see it on a week like this. What happens, the reason people think JEPQ and FEPI and everything's better or whatever is because it has been the past 2 months. Because when you have markets that are just blowing up, we've blown up pretty much straight up since October. So in an up market, you don't want a lot of buffer. And JEPQ, dogs and beats the heck out of, QQQY. But anyway, you can really see the difference. The daily options, the monthly options are good too. And I've said that I think JEPQ is trying to reproduce the benchmark test that CBOE did. That's the BXY benchmark. And there's another one, a BXMD, but both of those benchmarks outperformed just buy and hold the S&P 500. It's the best I've ever seen a covered call strategy do. And that was with monthlies. So I'm not knocking the monthlies. I'm not saying they may not be the best overall solution, because when you factor in that the market does usually go up, maybe you don't want a lot of buffer. So that's what maybe the monthlies are the way to go. But in a sideways or down market, it's a matter of math. The Defiance, the daily ones are a lot safer as far as how far they go down on a one-day basis. I know they don't bounce back as fast, and that's another story, but as far as on one-day moves, they're actually safer. All right. So that was pretty good. So let's look at the rest of these, see which other ones we didn't get. Tress just can't catch a break. Let's see, there's other ones that did well. I mean, SpyT, did fine. ULTY underperformed, but I mean, XDTE was, I would call in line. JEPI is one that I don't think I mentioned, but it actually outperformed by a little bit. That's nothing wrong with that. Up 2%, and its parent was too. XYLD had a nice week, got about 95% of the upside. QYLD actually outperformed, which it should, because ideally everything should outperform when you have a week when the market goes nowhere. So SPY looks pretty good, got about 90% of the upside, and iSpy outperformed actually. Tons of outperformance. iSpy is a great fund. And plus, when you factor in the tax efficiency and everything else, YBTC looks good. Look at this. On the average, they outperformed. That's impressive. On the single stocks, I don't know. Oh, yeah. And on the average, the single stocks did too. I mean, it's been a great week for these stocks. Let me know what you guys think in the comments. Remember, it's not financial advice. I'm not telling you to buy these. I said in one of my videos the other day that these are probably appropriate for about 1 in every 40 or 50 investors, because it shouldn't be anyone that already has more than 20% of their money in these. So if you're already all in and have half your money in these, I mean, then you don't need to worry about getting any more because you have enough. Not that they aren't great. These are awesome, but they also aren't for people that don't understand them. And so I just estimate that that's only about 1 in every 10 people, and about half the people probably already have too many of these, especially the people that are watching me. It's probably a higher thing than that. But these, in my opinion, are an appropriate investment for a small subset of people. But for those people, they really work and they're fun for me to evaluate. So I'm just doing this for fun and entertainment. I'm not telling you to buy any of them. I'm not telling you to sell any of them. I'm just trying to learn together. And if you see something, we're trying to learn together. And if you see something I missed, bring it to my attention. And maybe I can learn, and maybe I can learn also. All right, guys. You guys have a great day, and I'm going to get out of here now.